Good afternoon. Good afternoon, everyone, dear students, dear alumni and guests. My name is Professor Grażyna Rębielak, and on behalf of the Warsaw University of Technology Business School, I warmly welcome all of you to today's inspirational lecture. I want to welcome students and alumni of our university, Warsaw University of Technology, and our school, our partners, our guests, in particular from the Zicklin School of Business, Baruch College, New York City University, HEC in Paris, the University of Salford in Manchester, Sheffield Hallam University, Polimi Graduate School of Management, Politecnico di Milano, Goa Management Institute from India, Baltic Management Institute in Vilnius and in Brussels, the Management Center in Innsbruck, and the University of Minho in Portugal. Today we have a very special lecture. It's the first lecture in the series this academic year. And the inspirational lecture will be delivered by Professor Larry Zicklin, who is representing Baruch College. Larry Zicklin is an American professor, philanthropist, a dedicated educator, teaching at Baruch College, at NYU Stern School of Business, and at the NYU School of Law. A noted benefactor, he endowed Baruch's Zicklin School of Business and has established ethics centers at both Baruch and Wharton. He has also served as a chairman of the Baruch College Fund and has been active in civic and philanthropic organizations, including the UGA Federation of New York and the Center for Political Accountability. The topic he is delivering today is responsibility, yes, but to whom? This is our first inspirational lecture, as I mentioned, this academic year. And I would like to, before we start, I would like to take this opportunity to invite you to the next lecture, which will be delivered on the 18th of October, 2025, 18th of November 2025 by Dr. Sandra Wynn from Sheffield Business School, Sheffield Hallam University, entitled Developing and Sustaining International Research Collaboration Opportunities and Challenges. But this is in 1 month's time, and today let's enjoy our first inspirational lecture of the academic year, which will be delivered by Professor Zicklin. So I'm wishing you a very good time. And after the lecture, you will be invited to ask questions on chat. So please make notes. If you want to ask some questions, there will be this opportunity. Larry, you are more than welcome to start your lecture.
Thank you very much. I appreciate it. And thank you for inviting me. I'm going to tell you a story of a case that happened to me. This is not fictional. This happened to me. I was managing a firm in New York, a financial firm, a Wall Street firm, and we were mainly in the business of managing financial accounts for individuals, for institutions, for philanthropies, for universities, the endowments we managed. And that was our main business, and we did it all on a discretionary basis. We could buy and sell, and all we had to do was provide a monthly report on how we did during the month and for the year. That was our business. We also had a small business in addition to that business, making markets. We stood ready to buy and sell some small companies that we knew rather well, and we would make a market. We would make bids if you had something for sale and make offers if you had something to buy. And we would make these markets in, I don't know, 60 or 70 stocks. It came to pass that on that small part of the business, and I want to emphasize that it's the smallest part of our business. The main business was the institutional money management, investment management business. I was minding my own business one day, and a call comes in from another major bank. I don't remember the name of the bank. I'm going to call it Major Bank. It was a really large bank. And the woman on the other end of the phone was somebody I had met at conferences and I knew vaguely. And she said to me, "We do business with you all the time because you make markets, some stocks we're interested in. But I think in this one stock called, and I named it Trapham, we may be getting the wrong price." And I said to her, "If you think you're getting the wrong price, why do you continue to do business with us? Are there other market makers?" And she said, "There's one other market maker, and we don't like that market maker. We like doing business with you, so we do business with you. And besides which, that other market maker is quoting the same price as you are, roughly around $25 bid. So we do business with you. Could you please investigate it for me?" She was a good customer of ours. She was a customer in one sense, and she was a competitor in another sense because she was not an investment management customer. She just came, or her bank came when they needed an execution for one reason or another, a buy or sell. Anyway, I did the investigation, and here's what I found. The company she was talking about, Trapham, was a publicly held company that became privately held. They bid for all their stock. The stock was tendered, and the price was $4,590 per share. There's a way it got to $4,590 I won't bore you with, but it got to be $4,590. And they bought in almost all the stock. The company was delisted, and for all intents and purposes, it was a private company. It was no longer a public company. It was in the newspapers, so I don't want you to think there's any inside information. Everything was described in the newspapers. My trader, Jim, saw that article in the newspapers, and he said to himself, "I'll bet there's going to be some stock that's unaccounted for, that Trapham hasn't bought, that's floating around in the pillowcase, under the couch, involved in a marital dispute and a divorce and an inheritance, and there are going to be stray shares around. And if I make a market, every once in a while, somebody may show up and want to sell me some stock. I can't sell anybody stock, so they can't buy it from me because I don't have any. But maybe once in a while, there'll be some stock for sale, and I could buy it." And he did, because I looked at the record and I found the record. And every once in a while, he would buy 10 shares of stock, 40 shares of stock, 30 shares of stock. And they always bought it from a major bank. There were no retail customers involved, certainly not our clients, neither were there any other clients. It was always Citibank and Goldman Sachs and Donaldson Lufkin and US Trust and whoever, a major institution. And when I looked further along the record, when he compiled 200 or 300 or 400 shares, he sold it to the company for $3,000 a share. And when he bought it, he paid roughly $25 a share. So he was buying something for $25 and selling it for $3,000. When in the normal course of events, when you make a market, if you could buy something at $25 and sell it for $25.27, it would be a very good trade, and you go on to the next trade. But he was selling it for $3,000 a trade. So I called him into my office because, remember, I had to call this woman back from Major Bank. And I said to him, "Could you please explain what's happened here? Because I'm looking at it, And he said to me, it's very simple. I read the newspapers. I decided there'd be some stock around for sale. Um, I thought maybe the company would buy the last remaining stock shares just to clean up all this stuff that they have. They probably have 99% of the stock, but maybe there's 1% outstanding or 2% outstanding, and maybe they'd buy it back from me. I said to him, what if the company didn't buy it back? Did you have another place to go with the stock? And he said to me, no. If the company doesn't buy it back, and this is his quote, I'm quoting him exactly, I would take it and hang the certificates in my child's bedroom and use it for wallpaper. That's what he said. I said to him, so the risk was either the company bought it back or you got nothing. He said, exactly. And I was willing to take the risk because I figured if I got 200 shares and I paid 25, that's $5,000 for the 200 shares. That was my total risk. And if the company bought it back, I don't know what they would pay me, but they were the only client. They were the only customer. I said to him, did you ever have an order for the stock? Did the company ever give you an order? He said, no, they never gave me an order. I was always questioning whether they would buy the next piece that I ever bought, and I would try and sell it to them. And I wasn't sure. Anytime they could say no, and we're back to the wallpaper. I said to him, did you ever feel any guilt that you were buying stock from, let's call it major bank, at 25 and then selling it for $3,000? And he said, no, because major bank has very sophisticated traders that work for them. They get paid a lot more than I get paid. They're the cream of the crop. They know everything that's going on. And if they want to sell me 10 shares, $25 for $250, that's their business. I'm not about to tell them, and I have nothing to tell them because I don't know if I'm going to be able to sell it back to the company at 3,000 or any other number. If the company had offered me $26, I would have sold it to them. I would sell it at anything they bid me because I have no other alternative. They're the only buyer. I thought that was kind of interesting. I said to him, what about after you sold the stock to the company, Trapham, and you got paid? Did you ever have guilt then? And he said, no. Whoever this bank is, they're employing the most sophisticated people in the world. They're competitors. Why should I be concerned with what they do? And we had made probably, I'm making it up now, we probably made $1 million, maybe $1.25 million on the total number of trades. And I couldn't stop thinking about it. And then when I looked, he had made a series of these trades, always bought from the major banks, always sold back to the company. And he kept repeating to me, you have to understand, you're not a trader. I was never a trader. This is, and I'm quoting him now, this is a dog eat dog business. This is a highly sophisticated business. You give no ground, you ask for no ground. You're competing with sophisticated traders on every side, and you compete as hard as you can. His word, dog eat dog. And he even said to me, these are traders who would kill their grandmother to make an extra dollar. That was his description of the business. And I'm thinking to myself, do I have a responsibility to the people at the banks who really don't know what they're doing? Because if you think about it, for 100 shares, $2,500, we're getting 30,000. Or what did I say? We're selling it for 3,000? Yeah, we're getting $300,000. That's a big difference. And he said to me, the banks know what they're doing. And if the banks want to do this, they might have their reasons. I said, why can't the banks call the company? He said they could. The company doesn't treat us any different than it would treat the banks that called. Um, and I'm thinking to myself, as this is going on, do I have a reputational question in this? And I asked him that question, and he said, you don't have a reputational question. These are counterparties. They're not customers. If this were a customer, of course I couldn't do this. But they're not a client. They're not a customer. They're a counterparty. They trade with us when they find it convenient. They ignore us when they find it inconvenient. That's the way their lives are. We owe them nothing. They owe us nothing. A trade is a trade. If I were giving a conventional discussion with my class, I would say to my class at this point, what would you do? You all want to be managers. Um, you all want to be executives. Here's an executive decision that has to be made. And I was troubled by it. Uh, I should tell you, well, let me not bore you with the details, but the class would give me a range of answers because the students might say, give that man a bonus. He has been brilliant. He figured out that the company would want to buy up these odd lots of shares in order to clean up their books so they don't have 99%, they have 100%. They paid $4,590 when they took it private. They're only paying you $3,000. That means they're making $1,590 more than they expected to make when they took it private. Other people would say, well, what you should do is you should warn him that there is reputational damage, that he shouldn't do this again. It was nice that he did it. He made some money, but he probably shouldn't do it again. There are others that might say, you really owe these counterparties some money back because you have taken an unfair advantage of them, although my trader would disagree. And there are other people who would say you should just fire him because he doesn't understand what the business is. That's another point of view. I did what I did after thinking about it. But I'm not telling you, the audience, that what I did was right because it remains to be seen what's right. I showed him to the elevator and said to him, your days at our firm are over. And I'm going to take you to the elevator right now. You can come back on Saturday and get your things, your private things. I'll have somebody meet you there. And you just don't understand who we are and what we are and what type of firm we are and how much we value our reputation. And I explained to him what I had done. He was very angry. He thought I was out of my mind, that he had just made the best trade of his career. And he probably had. There's no question he had. And he didn't understand what I was doing. But I have to tell you one more thing, and then I'm going to open it up to you and your questions. And that is, as I approached the elevator, I remember I had my thumb on the elevator button. He said to me, you know, as a trader, I've always been on the edge. I've walked on the edge my entire career. And this time, I might have fallen off. And that was his line. I'm interested in your response.
It was really inspiring, and I have to say I'm speechless. A marvelous story. Absolutely incredible. I think it would be a good opportunity for the audience to ask you questions. So
Please,
if you have any questions or any comments, any observations, please type it in the chat, and Professor Zicklin will comment, will answer.
incidentally, while they're typing, I should tell you that I had a problem with some of my partners. I was what we call managing partner. I managed the business. And some of my partners said to me, "You've made a terrible mistake. He's a very smart trader, and you're lucky to have him."
Yeah, that's incredible. We have a first question. Um, if you don't mind me asking, what did you do with the money?
Fair question. Fair question. I talked to my attorney about it, and he said to me, "Larry, it's not enough that you fired Jim. You're going to have to call or write to these various firms. Let's say they were 7 firms in all. I'm making it up. I want you to write to them and offer to return the greatest part of it. Maybe keep a little something." He said, and if you listen to me, you'll just return all of it because you don't want to make a nickel on this trade because this trade smells. And I don't want this trade on our books. So we wrote a letter. First of all, I called the woman back that called me, and I told her, "Where do you want me to send the check? I will send the check for all of it, whatever, the entire profit we made." 5 firms of the 7 came back to us. We told them what we would do. They were very grateful. 2 firms didn't respond. We sent them another letter. They didn't respond. And I was thinking to myself, why haven't they responded to me? And my guess is, I don't know this, my guess is they were too embarrassed to respond because they realized their traders had made a terrible mistake and they didn't want to admit it. So we sent that money to charity. So all the money left our books. And as our counsel said to me, "I don't want this on our books. I don't want anybody from the SEC or the New York Stock Exchange or NASDAQ to ever look at our books and see this trade because you could not possibly explain it to their satisfaction."
Incredible.
Well, I want you to think about something else. The defense he made was, let's use 100 shares just to make it easy. 100 shares of stock was nothing to a big bank. It didn't mean anything. It was an odd lot. And I said to him, "That's not true. No bank owns 100 shares. It's impossible." This 100 shares was owned by a human being. Somebody owned this 100 shares. And we paid this person $2,500 for this 100 shares. And we received $300,000.
Yeah.
And pretend it was your mother-in-law or your mother or your cousin. We're keeping money from somebody, a person, not a bank. Not that it would make a difference. And that person is suffering enormously. So I made him understand that no bank owns 100 shares of anything, to say nothing of 10 shares or 15 shares or 20 shares.
That's very interesting. We have 2 questions. So I will read the first one. Why did you decide to fire him? Trader's work is making money.
Perfectly good question. And the answer is we have a reputation in the business of being fair. We have a big investment management business. And I kept thinking to myself, if this story were made public, we have an old phrase in Wall Street, would you want this story to be on the front page of the Wall Street Journal?
Mm.
If this story were on the front page of the Wall Street Journal and our investment management clients read about it, they would say to themselves, wow, the firm takes advantage of clients who don't know what they're doing. They wouldn't associate traders and clients. They would put the whole thing in one kettle. And they would say, will they take advantage of me if I'm not looking? I did not want that reputation out on the street. And I always assume that if it's bad news, it's going to become public. But if it's good news, it'll stay private. That was my theory in managing a firm. I never wanted bad news that I would be embarrassed about to get out, that I didn't control. And there were always problems. There's always problems in a firm. So I didn't want my reputation sullied. And I did it for that reason. I thought it was not only good ethics, I thought it was good business to do that. In fact, I'll tell you one more thing that happened. One of the firms that we wrote to and we returned the money wrote a letter to me personally, people I did not know. And they said to me, only a firm like yours would do something like this.
Mm.
We will always be your customers. That was a very nice letter to get. I mean, how much advertising could you do that was as good as that?
Yeah, it's about building trust because it's
Well,
long-term investment.
well, I was building trust. That's
Mm.
what we were doing. After all, when when individuals give you their money to manage, they're engaging in a trust relationship with you. They're
Yeah.
putting their money and sometimes all their money in your hands, and they're trusting you to do as well as you can with that money, and to treat them fairly. And we did that. That was our reputation in Wall Street.
Yes. And we have two other questions, so I will read the first one. Did you consider that you have an explanation to the people you bought the shares from instead of the firms you sold to? Seems like they were the ones that were not aware of the value of the shares.
Well, the individuals were not aware of the value, but I don't expect them to be.
Mhm.
If somebody inherited or found some shares in the pillow, or somebody was an heir and inherited some shares, what do they know? They go to a big bank and they say, what is this worth? And somebody looks at a piece of paper and says it's worth 25 because that's what we're bidding. That's what our competitor was bidding. So if you have 10 shares, it's worth $250. Did they know it was worth $30,000? I don't expect them to know.
Mm.
But if I know, that's enough. I believe that we have a responsibility not only to that individual, we have a responsibility to maintain the integrity of the financial markets. We're part of the financial markets. We have to support the financial markets. We have to support the proper functioning of the financial markets, the stability of the financial markets. And I've always believed that. And I believe in the long run, it works.
Mm. Yes. And we have a very tricky question, I would say. I will read it now. Imagine situation is reverse. Its company, some of it's working for its own ethical. Would you leave company to stay aligned with your ethics and values, even if you remain unemployed for a while?
Look, it's complicated. If I am the managing partner of the firm, I have to assume my firm will be in business forever.
Mm.
I know that that's unlikely, but that's the assumption I make. After all, I came into this managing partner's job from my predecessor who gave it to me. I turned it over to somebody else when I retired. The firm is still in business. Um, I'm transient. I'm not permanent. Nobody's permanent. Everybody's transient. I have a business. I have a responsibility to maintain the business as I see it till the end of time. And I don't believe in exaggerating the short term and ignoring the long term. I'm in it for the long term, and every once in a while, the short term, we have to suffer a little bit. Can I give you another example of that? As with other managing partners of other financial firms, it's a very volatile business, and we go through tough times. And I remember once we went through a difficult time for a couple of years, and I was under great pressure to reduce the staff of the firm and to fire, 10% of our staff. And I remember saying to the staff, "You're not going to be fired here." And I said to the partners, "I'm not firing anybody just because the volatility is as big as it is. What I'm going to do is I'm going to keep these people because I know what's going to happen when the problem of the volatility is over and the markets come back, because they always do. I'll have to hire people. I have to hire new people whom I don't know. And I've already fired people that I do know. That's not a methodology for success. And so I'm going to keep our people because, and one of my partners reminded me this the other day, my ex-partners, I said to him, because when the markets are good, we make a lot of money. And when the markets are bad, you're just going to have to tighten your belt. That's the way it's going to be. Because I'm not firing people every time the market goes up and down. Not my style.
That you want to build something and co-create with these people. This is how it works, because the culture that you've created, this really means a lot. It's not about, a person that is just an employer. Yeah.
I think that's right. We have a 25-year club at our firm, and I come to the club meetings once a year. They have a luncheon, and I'm shocked by how many people are in the 25-year club. They've made a career out of this firm. I'm sure they've been offered jobs away at higher prices, higher salaries, but they know this is a place where they can be comfortable, raise a family, work hard, and not worry every time the market goes down, they're going to get fired.
That means that this was the right approach.
I think so.
So, Larry, and there is one more question. Why do you think Trader didn't know in what kind of business he worked for?
Remember, he was getting a percentage of his profits. He was getting a percentage of the department's profits. And in my judgment, he lost his way. He was so concentrated on the profits that he forgot about the business. And it was for that reason that I fired him, because I said to myself, I can't have somebody that doesn't understand what the firm is, who its clients are, what its reputation is, and what the future holds. This is not for us. He can't do this. And I promoted not his assistant, but somebody lower down the line, because I thought he had the right attitude to the way this department should function. When he made that money, he really should have called back the institution and said, wait a minute, I paid you 25, I sold it for 3,000. You're entitled to more. Now, you could have debated how much more that person was entitled to, 2,000, 2,500, whatever the number you can debate. But you can't buy it from another institution for 25, sell it for 3,000, and ignore the difference. You just can't do that, in my judgment.
And I have a question. Do you know what happened to him? What was his career afterward?
I do. And this is a problem for me, by the way. He got a job in another firm. It lasted about 6 months, and he retired. And the last time I remember what he was doing, I heard he was running a bed and breakfast in Vermont, one of our states.
Mhm.
But I don't know any more about him than that.
That's a very interesting case. We have one question here, which I think is very hard to answer. Do you think that Donald Trump would agree with you? I think it's hard to say what other people think, right? And I would avoid going into politics. But we have some question. You said that people didn't know the actual value of these shares, but the firms you sold to didn't know the price you paid either. I understand that you are running a business and it was a decision better for the business. Do you think responsibility should be solely towards the market? Do you think it would be better to share some part of the profit made with the individuals these share acquired from?
That was an argument that many students make, and it's a
Mhm.
perfectly good argument. We decided to give it all back because, frankly, I was embarrassed. I was embarrassed. I kept thinking to myself, if this becomes public, I will be terribly embarrassed.
Yeah.
And I would think it would put our investment management business at risk. I don't want our clients to think that if they're not looking, we will take advantage of them. That's not what I want our reputation to be.
Yeah, and we have one more question. But wasn't Goldman Sachs unloading toxic securities to unsuspecting clients minutes before the collapse in 2008? That's what we learned from the Big Short. Isn't part of the problem the American focus on individualism? Not long ago, Trump asked a soldier, "What's in it for you?" Should examples of ethical behavior come from the top?
Oh, that it would happen, but it doesn't happen from the top. So you try and create it from the bottom. Look, I can't worry about the entire United States. It's 340 million people. That's more than I can handle. I worried about my firm, its reputation, what it did. Um, I get students very often when I present this case who say to me, I really think you made a mistake, that these were professionals. And I always say to them, just think of the poor widow in Des Moines, Iowa, one of our states, who just sold 100 shares for $2,500 and could have gotten 300,000. And think it was your mother or your sister, or for a man, for an uncle, your father, whatever. Um, do you want to live with that on your conscience? I don't.
Mhm.
And I'm not going to look to Washington to be my ethical guide. It's a very bad place to look.
Yeah, I think that probably everyone who is attending today's class will have different thoughts on this. And I think this is a very spectacular story, which we will need to think about and try to imagine what would I have done if I was in your shoes. And the answer is not straight because there are many factors that affects and even you may have some afterthoughts. But I totally agree that whatever you decide, you always need to feel about your feelings, your perspective, because this is your life, your decision, and you need to think in long term, because sometimes you might be tempted by
Well, I can
quick
tell you,
results.
I can tell you what would have made this even more complicated.
Mm.
If we were a public company
Oh,
and I
yeah.
had fiduciary responsibilities to shareholders, that would have complicated it even more. I thank heaven we weren't. And all I had to do was explain it to my partners, tell them why they were going to make a little less money than they thought they were going to make.
Yes, this will be a challenge.
This would be a challenge.
And we have, I think, the last question. Do you think that nowadays shares value represent real value, and can you logically predict their value?
You can never predict the value. Value is different. People measure value differently. If I could do that, I would have all the money in the world because I'd only buy stocks that go up, not that go down. That's why we have markets, and that's why we have differences of opinions. Um, I can make a case for why I think a stock is undervalued. But remember, if I buy it, somebody's selling it. So somebody must think differently than I do. That's the way the world is. I like that world.
And there is another question. How many CEOs you think would do the same?
The answer is I don't know. And frankly, I don't care. I do what I think should be done. I do what I do so that I can sleep at night. I don't want people, my example in Des Moines, Iowa, to be cheated out of their 300,000 and only get $2,500. That's a decision I couldn't live with.
Okay, and I think that this will be our last question for tonight because you had a lot of questions and I think that we learned a lot. Do you consider giving a warning instead of going for ultimate punishment? And thank you for answering the questions.
Well, I'm going to tell you about a flaw now in my own morality. I didn't think about a warning because I thought to myself, he's too far gone. If he would do something like this, it's too far gone. But I'll tell you what I did do that I'm not that proud of, but I did it. I let this story leak in the firm because sometimes you can tell another person the story and you know it will leak. So I knew who my leakers were because I wanted other people in the firm to understand the penalty for misbehaving. I consider this misbehavior. And I wanted them to know. And suddenly the firm understood that they couldn't do things like this, even if it were money making to the nth degree.
Larry, thank you very much for this really amazing lecture, this amazing story, and for answering all these questions. And of course, thank you very much to all the participants for your questions. I think they made this even more exciting because, we are live and we didn't know what you will be asking about. And as everything in life, not everything is predictable. So this is definitely an evening to be remembered. Thank you very much, Larry. Thank you for this wonderful evening and have lovely rest of the day. Thank you very much
Thank
and
you very much. I appreciate the invitation. Bye bye.
thank you very much. Bye bye.